Alibaba just released some very good news, which you just may have missed. They provided one of the missing pieces of the information about their previously announced spin-off plans for Cinyao, which was how exactly are they going to handle the spin-off of their global logistics powerhouse. Recall, their initial release had zero information, which at the time made me very worried because this particular segment is of absolute strategic importance to their digital retail operations. Well, they just provided us with all of the details that we need, and I've taken the time to read through all of the disclosures to provide you with the information that you need. So let's actually get into it. But before we can adequately understand exactly what the current disclosures are, we got to go over the following 4 items. 1, exactly how does Cinyao fit with the overall strategic direction of Alibaba's future? 2, I'm going to review the initial disclosures with you guys to remind you of what Alibaba provided to us when they initially said that they were going to spin off Cinyao. 3, I'm going to completely dissect all of the additional detail that they recently provided about that Cinyao spinoff. And 4, I'm going to explain why these new disclosures solves one huge problem that I had with the original disclosures and potential risk with this spinoff. So in my opinion, in the current digital commerce environment, you cannot just have a popular website that consumers like to go onto to shop. You also have to have adequate investments into logistics infrastructure to ensure that you can get those products to customers in a timely fashion. This is why we're seeing JD.com, Amazon, Walmart, you name it, anyone in the digital space investing in logistics infrastructure. And this is exactly where Cinyao comes into play with Alibaba. Cinyao is Alibaba's logistics powerhouse arm. And this is a segment of Alibaba that's currently giving all of the major e-commerce competitors in China a run for their money. And in fact, it's giving them a very hard time to compete. And globally, they're also a powerhouse, and they have just launched 5-day shipping anywhere in the world. Not even the great Amazon can make that claim right now. In the Alibaba ecosystem, you can see here that Cinyao purposely sits under e-commerce and international commerce. The reason why they did this is because the company serves as the logistics arms to this e-commerce juggernaut. Now, unless you were looking very closely, there was something very important in that image that you may have just missed. If you zoom in, you can see that Taobao Deals and Taocaicai are also supported by Cinyao. Why is this important? Because as I previously mentioned, you can't have a strong e-commerce digital footprint without a strong logistics arm, and Taobao Deals and Taocaicai are 2 sub-segments of China commerce that are rapidly growing. They are the new bets. And part of the reason why they're rapidly growing is because of the delivery promise that they have to their consumers, which is in fact better than some of their competitors. And so if they don't have the support of Cinyao, these 2 bets go away completely. Ultimately, that's bad news for the future of Alibaba's growth. So overall, the story here is that Cinyao works hand in hand with Alibaba, and if you separate these 2, you have a major risk. And that's why I believe that spinning off Cinyao separately from China commerce posed some real challenges, and it really worried me as an investor. In this environment where Cinyao was spun off, would it start supporting some of Alibaba's main competitors like Pinduoduo in China and Sea Limited in Southeast Asia? If that happened, overnight you would lose a key competitive advantage for Alibaba. Now, I know a lot of people would say that this potentially would not happen, but if you've completely spun off the company and you no longer have a majority ownership of it, who's to stop them from generating more revenue by servicing as many customers as possible? That was one of the concerns that I had. This is why when Alibaba initially announced the IPO plan for Cinyao, I was super worried because this release that you see right here is missing one key piece of detail. What exactly is the plan here? Are you completely giving up operational control of Cinyao? That's scary. And honestly, it would have helped if they provided a little bit more detail on that front here, but that might be asking too much. You know, like more share repurchases every quarter. Well, the good news is they only had to sweat for a short 4 months because now they've provided us with the disclosures that we were looking for. And just as an FYI, I've linked the disclosure in the description below so you can read it for yourself. First, Alibaba plans to spin off Cinyao by way of a separate listing of the Cinyao shares on the Hong Kong Stock Exchange. So in other words, there's going to be no ADR similar to Alibaba, but that's okay. The more important point is the next point. As Alibaba will continue to hold more than 50% of the shareholdings of Cinyao, it will remain a logistics powerhouse for the company, and it will remain a subsidiary of Alibaba. There was really no other way that you can do this without hurting the investor base, in my opinion. Now, Alibaba actually outlined 4 major benefits that they see coming from the spinoff. The first benefit is that the business will likely be revalued, so value creation will happen for all shareholders. I would agree with that assessment. The whole idea is to spin off these things so that they get revalued higher, because a lot of value investors will say that the sum of the parts for Alibaba is worth more than what Alibaba is currently trading at. And so in other words, you spin off a little bit of Cineao, the value creation that it does create for us shareholders will probably, at least in my opinion, take me from the deep red to a little bit less deep red. Investing genius over here, folks. This, of course, is the value that a lot of spin-offs are trying to unlock. In the tracker, I have another spin-off, Vista Outdoor, that is going through the same thing, and they just said that they're going to try and do that this year. And I have a complete valuation of that company, which you can access in the tracker that the Patreons get access to at that lower tier. The second benefit that Alibaba outlined is a 3-parter, where they first feel that the spin-off will hopefully have the successes of Cineao reflected in the share price. That's highlighted in the wording here. Secondly, they believe that it'll increase the operational and financial transparency, and of course it will, in my opinion, because the results will be better segregated. Third, and this is an interesting one in my opinion, they believe that investors will be able to appraise and assess the performance, and here's the key word, and potential of Cineao Group separately and distinctly. Now, I believe that that's a double-edged sword, because if Cineao is doing well, it will get repriced at a higher valuation. However, if Cineao's not doing well, if they mess up a little bit, they could actually have a lower valuation than Alibaba as a whole. So you got a double-edged sword here. However, Cineao is an internationally focused and fast-growing business, and so I believe that they will have a higher valuation than Alibaba as a whole, because ultimately they can potentially be seen as a company that has less China-specific risk, albeit they do still have a lot of China risk. The fourth benefit is something that I've never even thought about, but it's super important, as they believe that by separating, they can attract a different investor base that specializes in logistics companies. And that, to me, actually makes a lot of sense. The final benefit that they mention is from an operational perspective, as they feel it'll boost their standalone profile amongst customers, suppliers, and potential new customers. They will be able to independently access debt and equity markets, which in turn will help them with their ratings with the credit agencies. And finally, it should lead to a more direct alignment of the management team to the business. And those are really great benefits, but the most important benefit, in my opinion, from the way that they're structuring this whole deal is that Alibaba will continue to maintain control over the organization, which means that the management team will be free to pursue new customers, as they mentioned in point number 4. This is the Cineao management team, but not at the competitive detriment to Alibaba's China commerce business. And that was my biggest fear with spinning off Cineao, and I'm glad that it's been addressed with this new release. Now, I still feel like Alibaba is undervalued, and I've just revised my valuation, which you guys can get access to at that lower tier of the Patreon. You get access to all of my research, and like I always say, if you are not satisfied with the research in the first month, you get a full refund, so there's never a risk to you. And of course, the risks that we went over in this video are inherent to Alibaba in relation to the spinoff. However, there are 4 major risks that are pervasive to the economy as a whole, and they can impact your Alibaba securities and all the other securities in your portfolio. And in order for you to understand exactly what those risks are and protect yourself accordingly, please click on this video.